The market was down this week, and so was my account. Stay tuned and I'll give you an update. And if this is your first time on the channel, or maybe you want a refresher on my strategy, at the end of the video, I'll quickly recap my small account margin strategy as I try to turn $1,000 of Robinhood's money into $1,000 of my money. Let's get started. Remember, nothing I say today is financial investing or any other kind of advice. You need to do your own due diligence for your investments. This screen is my small margin account, Robinhood listed as my individual account. At the end of this past week, it's valued at about $2,253, which is down a little more than 2% over the last week. If we take a look at my margin maintenance threshold, you can see I'm at 10.91% above the maintenance minimum, which is not bad. If this 10.91% number were to go negative, I would be facing a margin call, and I've had that happen a couple of times. I have $17.21 of buying power available. I don't use all of this buying power because I received a refund of my Robinhood Gold membership when I changed payment methods, and that prorated refund was applied to this individual account. I already spent $1,000 in margin, so I'm just leaving this sit there. It's about $15 or $16, so I do have a little bit of buying power available to me. We'll talk about that in a little while. So if we take a look at the past month of the account, we can see it's about flat, only down about 0.2%. These flat spots you see here are weekends and holidays where nothing's really happening. But you can see this last week, we were kind of at a high up to 23.16 before falling all the way down to the current value of about 22.53. Let's take a look at each individual high yield ETF, starting with BLOX. We can see for the week that it was down a hefty 11.32%. Starting the week at $17.76, falling all the way down to $15.75. My current cost basis is $16.64, so I'm underwater about 90 cents per share. I have a little more than 9 shares. Now we switch to CHPY or CHPY. It was down big on Friday, over 4%, and for the week it was down about 5.6%. Currently trading at $81.70 per share. The good news is my cost basis is $57.89 with just shy of 3 shares. NVII is my third ultra high yield ETF, down about 1% on Friday, and for the week down about 8.75%. Currently trading at almost $23 a share. My average cost is about $26.50, and I have about 7.5 shares. SPYI was down about 0.6% on Friday, and for the week was down about 1.5%. Currently trading at $52.15 per share. My average cost basis is $51.36, and I've built up over 4.5 shares. Finally, here's PAAA. It's flat on the day, and for the week was up just a hair, and this is what I expect. If you scroll out and take a look at how it functions, it builds up, pays out a dividend, drops down. Builds up, pays out a dividend, drops down. We're getting close to the dividend. My average cost is $51.26, and I currently have over 47 shares. If we zoom out from that weekly view and take a look at the monthly view, it hasn't been a great June for price return. On the 1-month chart, BLOX is down almost 7%. CHPY is flat, down about 0.4%. NVII is down 15.72%. SPYI is down a little over 3%. However, that's not the full picture. Let's take a look at total return, not just price return, over the same 1-month period. Things get better. BLOX down about 3.6%. CHPY up almost 4%. NVII down 10.5%. SPYI down about 2%. Here I've added QQQ just to give you some context. It's down about 3.15% total return on that 1-month period. So SPYI and CHPY have outperformed QQQ on total return, and BLOX is not far off. Turning to dividends, let's start with NVII. On June 24th, I received a little over 22 cents per share for a total of $1.67. Again, this is around that 45% annualized yield. I split the dividend in half. Part of it went to SPYI. The other half, the 84 cents you see in red, is pending reinvestment back into NVII. I need at least $1 to reinvest. So I'll combine it with next week's distribution. Here's a look at the 6-month distribution chart of NVII, just to give you a visual sense of how it's been paying out. We had this huge spike about a month ago, and since then it's gone back in sort of its average range. I've updated the chart to include price return for NVII, just so you can get a sense of how the dividend compares to the price. Price return has really been trending down since about mid-May, and hopefully this will turn around. BLOX's dividend this week was 11.73 cents per share for a total of $1.09. Remember, BLOX is aiming for a 36% annualized rate of return. I split the dividend in half, and just like NVII, I'll have to wait till next week to reinvest back into BLOX. Here's a chart of the 6-month dividend amount for BLOX. The dividend trended down from January to April, but has recovered a good bit. The cryptocurrency world hasn't been great during this time period. For the NVII graph, I showed you price return as a percentage. For this one, I think I'm going to go straight price. As expected, the dividend for this ETF tracks closely with the price, since the fund tries to pay out a fixed percentage. CHPY paid 77.5 cents per share this week, for a total of $2.30. Half of the dividend from NVII, BLOX, and CHPY was combined and reinvested into SPYI. For CHPY, I was able to immediately reinvest that $1.15 into more shares. The 6-month dividend chart for CHPY looks great, trending up and to the right. If we add in the price, I'm sure this will make perfect sense. It's remarkable how closely the dividend is moving along with the price, even though the fund does not have a stated percentage payout. I hope the trend continues. Unfortunately, some of my green turned to red this week. CHPY had been in the positive, with the current value over $250. However, that sank this week, sending these back into the red. Everything went down, with the 3 ultra-high yield ETFs now down about 43.5%, and combining that with the SPYI profit, the total portfolio is down about 20%. But it was a bad week in the market, so not unexpected. If you're new to the channel, or maybe it's just been a long time, you may be wondering, what is this plan and how does it work? I'm going to give you a brief overview of the plan, but you can go into a lot more depth with the first 5 videos in the series. I'm using Robinhood Gold to get an interest-free $1,000 margin loan. I do pay $50 a year to be a member of Robinhood Gold, but that gives me several perks, and I'm doing that anyway. One of those perks is a free $1,000 margin loan. To anchor that loan, I had to pick a foundation fund, which I chose as PAAA, and I invested $2,000 of my money into this fund because $2,000 is the margin minimum. I have to have at least $2,000 of my equity into this account. And I wanted an investment that would provide some return, but also be a buoy for the account and keep the account from going underwater. I chose PAAA. I split the $1,000 interest-free margin loan into 4 ETFs and invested $250 into each. Those were COIW, NVII, MSTY, and SNOY. These were ultra-high yield ETFs. My target was over 75% annualized yield, and some of these went well above that, even above 100%. However, over the months, those investments began to bleed their net asset value, or NAV. And as the price share went down, the dollar amount of the dividends went down, even though the percentages remained high. So over time, I ended up selling out of all of those. I even had one additional one mixed in, HOOW, but now I've converted them all to NVII, BLOX, and CHPY. I combined the old COIW and MSTY positions into the current BLOX position. So I went from 4 ETFs down to 3. I take the dividends from each of these ETFs and split it in half. 50% goes back into the fund that produced the dividend, and the other 50% goes into my forever fund, which I chose as SPYI. This is an ETF that I hope I can keep for years and even decades because it's NAV stable. Of course, it goes up and down with the market, but it's not suffering from NAV erosion like a lot of my original ETFs did. What I'd like to do is build up the position in SPYI until it's worth $1,000. Then I can start paying off the margin loan. And if this works, I'll have taken $1,000 of Robinhood's money and turned it into $1,000 of my money. There's a lot of risk here, but I think it's an interesting experiment, and I hope you'll follow along. So if you found this episode entertaining or helpful, or you'd like to see how it ends up, please like and subscribe. I would really appreciate it. Leave a note in the comments. Do you think this experiment will work? Will I be able to turn $1,000 of Robinhood's money into mine? And remember that nothing I said here today is financial, investing, or any other type of advice. I'm just inviting you along my journey. And if you'd like to learn more about my small account margin strategy, check out the first 5 videos in the series. Good luck hunting those infinite dividends. Take care.